Okay, so just take note that this presentation is purely for educational purpose, does not take into account specific investment objectives, financial situation, or particular needs of any particular person. Okay, so moving along. Now, markets have finally been moving. Indices pushing higher and higher and higher. Something I'm not that keen to see, and something a lot of my clients are not that keen to see as well. I mean, just whenever you try to rationalize why it does not make sense for the market to go higher, whenever you try to rationalize that it does not, there's no validity in the move, fundamentals are not backing up. The more you think that way, the more the markets will prove you wrong, and it did again. So, for example, the S&P, you can see that the 23, well, or at least I thought that the 2300 level um, was very bullish. Let me just pull out S&P for a quick one. Yeah, I thought 2300 level was good resistance. But the market will do what it wants to do. We push higher and now we're at 2355. Okay, so if you go to the daily chart, let me just zoom out for you. Okay, so the 2300 level was somewhere here. Yep, let me delete some of the lines. Yep. So 2300 level was somewhere here. I mean, though, there's not much resistance to see because it's an all-time high. But being a whole number, being this channel resistance, let me just zoom up for you to see channel. See? So I drew this little channel here that came out for all the way to 2015. So 2300 to me was quite strong resistance. The daily chart actually formed some kind of double top. Okay, I was more keen to see it drop down, break 2270 and come all the way to 2240, 2250. So, okay, that was what I anticipated. But what happened in the charts is a whole new different thing. Because it broke 2300 and right now we're just making high, 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 high. Okay, where is it going to go to? I have no idea. Because in terms of technicals, the only resistance that I can see is based on whole numbers. Okay, so maybe the next level might be 2350 to 2360, maybe here, or 2380. But whenever it keeps pushing higher, you just got to follow it. Okay, that's why when you are a price action trader, I always tell clients, if you trade price action and trade technicals, you need to follow price like a dog. All right, try not to second guess yourself, try not to overanalyze and just follow it. And in any case, the fundamental or the very basis of your trading should be on the premise that the market is random. Okay, it took me quite some time before I truly understood what does it mean by the market is random, and it will do what it wants to do. Every time when we predict something and it does not, turn out, it does not play out, then so be it. You know, don't try to chase the market or don't try to prove the market wrong, because there's always opportunities out there. If the S&P doesn't give you opportunity, there's always the DAX. If the DAX doesn't give you opportunity, there's always the Nikkei. If the Nikkei doesn't give you opportunity, there's always FX pair. So there's so many things to look at, so many things to trade on. The last thing you want to do is get stuck on some particular instrument and see your losses get bigger and bigger and bigger, and you can't do anything because your mind is stuck. Okay, it's not a good feeling sitting on loss or power losses. So I always advocate when you trade, you need to know when to get out. Okay, you see you feel a world of difference when you do that. Yep. Yes, John. A lot of traders are waiting to short. Yeah, I mean a lot of people are just waiting for something to trigger. Yeah, I mean some waiting for Donald Trump to say something. Waiting. It's just like I want to say ticking time bomb, but I will not say that. Bomb is a sensitive word these days. But anyway, a lot of people are trying to. I mean, they're just waiting for something to happen and just taking shots prematurely, and this is very dangerous. Okay, I mean, I say this many times during my webinars. Do not try to predict the markets. Okay, follow price action. So for those of you who are new, um, what I do a lot is price action. Every single day I'm refining the way I trade, refining the way I look at the charts. But essentially the gist of price action is I'm trying to define which phase the market is in, whichever time frame. It can be daily, weekly, 1 minute chart, 5 minute charts. What I'm doing all the time is trying to understand whether the market is uptrend, downtrend, or consolidation. Okay. I'm also seeing whether the market is trading on an impulsive move or corrective move. Okay, when I say impulsive move means, where's my drawing tool? Okay, when I say impulsive moves means that, it doesn't make much pullback, it just goes up like that. Okay, very small pullbacks. Okay, when I say corrective moves, means maybe that is going up and then maybe it's consolidating here and then it goes up again. So this is more of a corrective move. Okay, but the reason why I'm looking whether it's impulsive or corrective is so that I know how to position myself. Because for example, dollar yen, you remember how dollar yen shot up post Donald Trump election? You know, after the elections when he won, how dollar yen shot up because of all this bullish sentiment. What happened dollar yen was this one, impulsive. And if you were not sharp enough to get into the short-term retracements, you might have missed the whole move. Okay, so it's good to define whether it's impulsive or corrective kind of setup as well in a trend. All right. Again, there's any of you any questions at any point in time, please feel free to type in the question box. Okay, feel free to interrupt me so that I can I can address the question ASAP rather than wait to the end. All right, so this is a webinar. By nature, it's interactive, so feel free to say anything you want, and I try to get to them as soon as I can. Let me get rid of this. Okay, now before I go to the live markets proper, right? There's this thing about I was just speaking to the client the other day. There's this thing about time frames and what's a suitable time frame for you. Let me see whether I have this slide here. It's very important as a trader to understand what kind of time frame trader you are. Okay, whether you're a swing trader, a day trader, a scalper, position trader. I'm not mentioning this for quite some time, but you notice that whenever I analyze the markets, I look at different charts, correct. But I have a key chart in mind based on what I'm trying to achieve. So for example, if I'm scalping, okay, my key chart will normally be the 1 minute and 5 minutes. That's where I execute the trades. But my reference chart is 15 minutes. So you need to understand what's your point of reference. So if I'm intraday trader, my point of reference is more towards a 4-hour chart. And as much as possible, I try to go with the same direction as the 4-hour chart. My execution chart is in the 15-minute chart, okay? And that is where I try to manage my expectations on. Because it doesn't make sense, okay? It's very, if you don't understand how to use multiple time frame, right? This is what might happen to you. So for example, this is a 5-minute chart, okay? This is a 5-minute chart, okay? And maybe you see that there's a nice breakout. Brilliant, perfect. And then the 5-minute chart pulls back, okay? You take a long here. Maybe there's some form of short-term support, which is fine, okay? Which is fine. And then it goes up here, okay? But you fail to see that, you know, on the longer-term chart, maybe there's some resistance here. So on a 5-minute trade, maybe this move is sufficient. Maybe this is about 15 pips. Good enough. Okay, but because even though you're trading 5 minutes, your expectation might be on the daily chart. Perhaps you expect the trade to keep going higher and higher. Maybe your target is 100 with pips. Now, if you want to do that, you need to be prepared that, okay, so if this is a 5-minute chart again, okay, so what happens is that the 5-minute chart normally will not just shoot up like that. Okay, normally it will muck around. It will even come down first before it will start going up and hit your maybe 100 pip target. But the whole reason here is you need to manage your expectations based on what your execution chart is. Okay, so I repeat, you got reference chart, you got execution chart. These things that I have here on my slide, something I did like 4 or 5 years ago, is a guide. It's a guideline. It's my own guideline. Okay, so it's really up to you what you prefer to use. But what I'm just emphasizing here that you need to know what kind of trader you are. Okay, if you're new to trading, go try out all the different types of time frame and see what suits you. It can be 5 minute, it can be daily. All right, don't be shy to try out. You never know what suits you until you try it. Okay, and the demo account does not give you that kind of psychology. You need to do a live account. Okay, so there's multiple time frames for you. Now let me move on to the live charts proper. Okay, moving on, let's start with the indices, which is the S&P. Okay, let's have a quick look at daily chart. So as I mentioned at the beginning of the webinar, S&P is just bullish. Okay, there's no way to two-way about it. Bullish, even if you are a die-hard contrarian trader, okay, or you really don't believe in this move, there's no signs, at least on daily chart, that it's coming down yet. Right, it made a nice big swing up, convincingly breaking the 2300 resistance, which I mentioned just now. Okay, 2300 was quite key to me because if I zoom out like that, you can see that it's a channel resistance, it's also a visual horizontal resistance, and it's also a whole number resistance. So 2300 for me was quite key, but now we have broken through clearly. Okay, very bullish. Alright, just very bullish. Now let me go to low time frame, the 4-hour chart. Okay, there's a bit more price action to analyze on the 4-hour chart. So you can see a medium-term support forming near the 2340 level. Alright, a short-term support forming near the 2350. And of course, you got the high at around 2360 or so. Okay, so these are the 3 levels you want to focus at. Now, if we break this previous high, I'll use the candle close as a gauge, which is around the 2355 level. If we break the previous high, I'm not surprised if we push higher and higher. Okay. If we break the short-term support, then we might do some form of consolidation around here. So if you are going to trade the S&P and if you're a short-term trader, long-term wise, yes. When I say long-term means daily chart, 4-hour chart, it is still bullish. Okay, but in between here, in between this range, see these lines I draw? The reason why I draw these lines because I want to establish the range. So in between this range, if you are some form of intraday trader or scalper, there's still points to be made. Okay, let me zoom in a bit more. Let me go to the 5 minutes for you. Okay, you see the 2 lines I draw? So if you are a intraday scalper or slash trader kind of mindset, you can actually trade within this range here. Okay, between the 2 lines. I kind of like the levels because they are, especially the support, there are 3 touches, resistance, there are a few touches as well. So this is what you might want to look at. Okay, anything in between here might not be a good idea anymore. Anyway, this is already the 5 minutes time frame. Okay, there's no other lower time frame you can go to try to squeeze some points out of this setup. But if you look at the 5-minute time frame, you can see a nice well-defined support resistance. It is possible to trade off it. Other than that, on the daily chart, it's still bullish. On the 4-hour chart, it's still bullish. So you might want to wait for some kind of support to get in again. Okay, these are all the different levels of support. I think there's another level support here. Yep. But right now, it's a bit, even if you're bullish, a bit too late to do anything. You need to at least let it break the 2356 level first, 2355 level before targeting higher. Okay, but S&P looks bullish. Okay, there's the key thing to take note of though. If you look at the MACD, you can see that this is a lower high. Yeah, but there's a significant high on the price. Okay, this is called bearish divergence. Okay, bearish divergence. Daily chart, there's no bearish divergence. Okay, so bearish divergence means that in a swing kind of perspective, price might come down, and if that's the case, we might come to this level of support before the market decides what it wants to do. Okay, this level of support. So pay attention. This period, short-term support. If it breaks, most probably be drifting back here. Okay, so that's S&P. Very bullish. Still looks bullish. So again, different time frame can have different perspective. You need to know what you're looking at. Sunil, nice to see you. Oh yes, correct. There's divergence. There's divergence 4-hour. Thanks for pointing that out as well. Okay, so different time frame shows different things. You need to know what you're looking for. That's why they said the short-term trader can say one thing, a long-term trader can say another thing, but both of them can still make money. Okay, what's next? Let's go for the DAX. Okay, DAX daily chart, looking nice and bullish. Zooming out, approaching some form of resistance. You see the previous touches here, way back in 2015. Approaching some kind of resistance, and right now we are around 11,800. So it looks bullish as well. Might be a bit too late. Not might be, it is too late to take any long positions right now. The only thing that you might want to do if you're still bullish is to maybe have a order to stop order to buy here, and hopefully it triggers, and then you can go to the next resistance of 12,000. Speaking about 12,000, right? Yeah, not the cleanest resistance. Let me have a quick look. For the DAX, it's slightly different because there are still resistance up ahead. For the S&P, it has cleared all the resistance already. So for the daily chart on the DAX, you can see that around the 12,000 level here, yeah, much clearer here. Yep, this level here seems to be next level of resistance. So if you're bullish, you need to at least wait for a breakout first before targeting a 12,000 level. If not, now it's sitting at resistance. Okay, but the DAX looks really bullish. Let's go to the 4-hour chart. Okay, 4-hour chart as well. No two ways about it. Nice and bullish. Okay, just that right now, just too close to resistance. Too close to resistance. Yep, it made a double top here, but now the bull seems to be pushing through. okay? Only thing take note again, it's quite similar to S&P is, you can see that this level here, compared to this high is making, so this is a higher high, but the MACD is making a lower high. So again, another bearish divergence, okay? So just be mindful, okay? So all these divergence that I'm pointing out is not as though the market is going to reverse and drop immediately, okay? Because number one, divergence, the bearish divergence on the 4-hour chart, so it takes time to materialize. Number two, these are just signs, okay? Divergence is not a entry signal to me. What's the entry signal? Price action. Okay, divergence is just for me to give a heads up that, hey, the momentum might be waning. That's all. Okay, I do not use divergence to just enter trades like that. No, unless price action confirms it. Okay, so for example, if there's divergence here, but 4-hour is showing toppish signs, okay, then maybe I say, okay, then maybe there's more confirmation that the market is going to reverse and come down. But in this kind of case, whereby it's totally opposite, okay, I still stick to my price action. Maybe I can still take short-term buy positions. Okay, but on the back of my mind, I'm mindful that there's a bearish divergence on the 4-hour chart. Clear? Let me see. Okay, so if you look at the 5-minute chart, okay, you can see that the 5-minute chart is bullish, okay, and the immediate resistance is still testing. So on the 11,890 or so. Okay, right now the series of high lows, high chance might break above. Okay, nice bullish on the DAX. Okay, what's next? Any questions so far? You have anything, just throw it at me, yeah? Not literally, of course, but yeah, feel free to shout, okay? Because the more questions that's being asked, the more learning there is for today. What's next? Okay, let's go to Japan, Nikkei. I'm a big fan of price action, okay? The more I talk about it, the more I trade it, the more I learn about it, I get very excited. Okay, because price action is so powerful. It's a leading indicator. And I'm not sure I mentioned this before, but the one way to hone your skills as a price action trader, okay, is to practice, practice, practice. And the only way to practice now, if you practice a demo account, in the beginning, yes, let's say if you're totally new to trading, maybe the first month or so, okay, demo account is fine, just get a hang of the platform and things like that. But after a while, it does not serve you at all because the psychology is not involved. And when the psychology is not involved, it's not real trading at all. Okay, because a big part of trading is psychology. So you need to move on to a live account. But then when you move on to a live account, and let's say if you are a working professional, and most of us are, we do not have much time to trade, and we tend to trade longer term charts like 4-hour, daily, or maybe 1 hour. The question is, how much practice are you going to get? How many setups are there on a 4-hour daily chart per week? 1, 2, 3 the most? So the thing is, 3 trades per week. Is there enough practice? Maybe not, isn't it? Maybe not. So there are a few alternatives that you can overcome that is, number one, okay, over the weekend when the market is not moving, you can use a platform like MT4. IG is MT4 as well. And what you can do is you can fast forward, pull back the markets and basically press, I think it's F11. Yeah, F11. And basically when you press F11, what it does is that it makes the chart move step by step as if it's a live chart. Okay, and then when you do that, you can so-called try to put arrows and see where's your entries, where's your exits, and see whether you're accurate. That's one way. That's a more tedious way. An alternative way is you can use softwares. Okay, I'm not selling them in any way, but I'm just saying that there's this software called Forex Tester, which is very, very useful because what it does is that it simulates trading like a live market. Okay, so you can move forward, you can move backwards, and when you press play, the markets will move as if it's a live market. Okay, and you can use any time frame and things like that. So over the weekend, you can use such a simulation software to also keep practicing your strategy. And that's how you get good at price action. Or any other strategy that you might have. You might not like price action, you might like Ichimoku, you might like harmonics, by all means go ahead. But I'm just saying that to be proficient and expert at something, you need enough screen time and enough practice. And if you're just trading longer term charts, that's not enough. You take a long, long time before you get proficient. Okay? Because at some point in time, you need to hit a stage whereby your strategy is second nature, and then the next step is to hone your psychology to it. But if you don't reach the stage, if you keep changing your strategy, if you're not sure of strategy, and you keep mucking around, then that's where you never succeed in trading because you have not even gone to a stage whereby you need to start focusing on psychology. Okay, so that's very important. Like for me, my strategy is more or less sound already. Okay, more or less, it's almost second nature. So I'm focusing a lot of psychology, doing meditation, conditioning my mind to make sure that I don't make stupid mistakes as a trader. Okay, that's the toughest part. Okay, but it's the same journey everybody has to go through. All right, so looking at the Nikkei now, so if you go to the daily chart, you can see that it's sort of consolidating, isn't it? Okay, you can see the lines I drew here. This is resistance, this is support. Momentum is slightly to the upside. The reason why I say that is because this is the base. It formed higher low, another higher low here. Okay, so two higher lows. So momentum is slightly towards the upside. And the resistance is around the 19,600 level here. Right, so this is daily chart consolidation. Now, if you look at the 4-hour chart, not much going on here. Okay, really not much going on. In fact, there's not much to no particular trade set up around here because the price range is very mixed. I would prefer using the daily chart for my reference point if I'm looking for a swing kind of trade position. Okay, so you need to at least break the level first. Okay, the only opportunity that you could have bought was a couple of days back when it hit the support around 19,000. Okay, but right now we're in the middle of nowhere. It's better to let it break above. Or if you're bearish, the opportunity will come closer to 19,000 level. Okay, that's where if the market hits it and starts coming down, okay, that's a possible trade plan. Okay, so if you're bullish, better to let it break first. If you're bearish, possible resistance up here at 19,000. Sorry, 19,600, sorry. Can't really see properly there. Okay, resistance at 19,600. Yep. Shorter term charts, yeah, just bullish uptrend. Okay, but I'm just not too keen just because the direction is not that clear right now. Okay, so just bear this in mind in terms of the daily chart. It's consolidating. Yep. Let me see, Sunil. Okay, Sunil said that it is a triangle, possibly a breaking up. Oh, I know what you're looking at. You're looking at this one, right? And then you look at this. Okay, Sunil said that it's consolidating in a triangle or wedge and possible to break out. Yes, possible. Possible. Okay, I prefer to let it break this 19.6 cleanly first before jumping in. Okay, because even if it breaks this level, right, Sunil, you see this level around the previous high, which is also the trendline resistance at around 19,005. There's still resistance up ahead, a bit too close. Unless you're taking a very short-term trade, then possible. But there's a lot of resistance up ahead. It's a bit too close. Okay, so for me, I'll let it clearly break this level first. Then maybe I'm interested to get into a long position. Okay, because there's a lot of resistance near the 19,006. Yep, but thanks for pointing that out. Okay, so that's the Nikkei for you. What else? Okay, let's go to Hang Seng. Hang Seng, daily chart, bullish, very bullish. Let's see if there's any resistance. Okay, so this is a Hang Seng for you. This is a zoomed out daily chart. Okay, so this level here around the 24,000, let's say this level, 24,120 level, you can see that multiple level of resistance, support, resistance, and now potential resistance again. Is this a clear breakout? I don't think so, not in my book. Is it a clear breakout from the 24,120 level, that strong resistance? For me, it's not. For me, it's not. Okay, and we look at this daily candle, right? Okay, it's actually a bearish engulfing candle all the previous 3 or 4 candles. Okay, so I think there might be a bigger retracement coming. That's on the daily chart. If you look at the 4-hour chart, you can see that this big red candle is a clear sign. Okay, it's not bearish, it's still bullish, and I'm not surprised that if we test the top again. But what I'm saying is that, okay, it seems that the bulls are a bit exhausted. Okay, one sign was when you make a higher high here, this was actually a lower high on the MACD. Okay, so remember I told you about was it S&P? Yeah, S&P and the DAX. This is bearish divergence I'm talking about. So this bearish divergence played itself out. Higher high on the 4-hour chart on the price, lower high on the MACD, boom, came down. Okay, now if it breaks this support, high chance that we might come to next level support, probably around the 23,800 level. 23,800 level. Okay. Now, if not, if you want to play this as an intraday kind of trade, what you can do is on the 15-minute chart, key levels are this line that I drew. See these 2 lines? Let me take this away, sorry. Okay, see these 2 lines? Okay, so this support is around the 23,960. Chances we might hit this level and push up to the next resistance level around 24,120 or so. Okay, but what I like about this is have a look there. Have a look here. Now, if you're trading intraday, right? Okay, if you're trading intraday, here's one tip that you can look at. So if you have a perspective of what's happening on the 4-hour chart, okay, you know that it's bullish, right? Okay, let's say we look at the movement here. This is a bit theory, so listen up. So you know that it's bullish. Nice and bullish, isn't it? Okay, nice and bullish, right? Lower, higher, low, higher, high, higher, low, high, high. Okay, but you know that on the 4-hour there's a bearish divergence. Okay, I'm just talking. Ignore this big red candle. I repeat, ignore this big red candle. So imagine that you were couple of just 2 days, 2 days ago. Okay, so you know that this higher high has happened, but there's lower high MACD. So in your head, there's a bearish divergence. Okay, but remember I told you that bearish divergence is not a signal for you to buy and sell. It's only a confirmation indicator. So if you were to ignore this red candle here, okay, but you see a bearish divergence, it's just a signal. That's it. But how do you know when you could have acted on it? That's where the 15-minute gave you a sign. Look at these two lines I drew here. Okay, so even this whole area here caused a big red candle. Okay, this whole drop here caused a big red candle. But just take this out of the picture for the moment. Take it out of the picture. Now, even without this drop, you could actually still draw this line on top here. See this line here? This resistance line? Because of all these touches. Beautiful resistance line. Now, when you see the market break up, okay, it is right to assume that the bulls are still in control. Of course it is. High low here, break up, pull back, continue upwards. It's absolutely right to assume they're still bullish. Okay, and yes, it marked around here, maybe it needed more bulls to push it higher, but it is still bullish. But when the market, let me just delete the circle. When the market came down, okay, see when the market came down from this and closed below that resistance and support, then you have every right to now say that this might be a false breakout. This might be a false breakout. Okay, so I repeat, initially when it broke this key resistance level here on the 15-minute chart, there's every right for you to say that the bulls are in play, it's going to push higher. But then when it came back down and the candle closed below this key line again, so your resistance became support, but then the support is broken again. It shows that this area here is what I call a false breakout. Okay, a false breakout. And then your 4-hour bearish divergence on the MACD can come to play and say, okay, maybe this is a sign that finally it wants to drop. Okay, so this is called combining different time frames and different analysis. But it's a very simple analysis. The only thing that I have is just this straight line. That's it. The straight line, the divergence, and that's it. Okay, don't need to be so complicated, but support and resistance, these are very, very key levels for you. You need to be able to understand the liquidity flow. You need to be able to understand what the bears and bulls are doing, or bulls and bears. And once you understand price action in the purest of form, it's a beautiful thing to look at when you're trading. Okay, because it really tells you what's happening. Yeah. The only thing I would say for this particular setup is it's hard to get in. Because normally what I like to do is I like to, if it comes back down here, right? Okay, my mind said this is a false breakout to the upside. I prefer to enter back when you come back to at least touch the line or at least near the line. For this case, some of you aggressive one might have gone in. I mean, if it's me, I might not have gotten in. Okay, some of you might say that, okay, there's actually previous touches here, see here and here. So you might have gotten in. Of course, on hindsight is easy, isn't it? On hindsight, anybody can see that they've gotten in when the market is moving towards the same direction you predicted. But I'm just saying that ideally, I prefer to let it come closer to the line, just because of stop loss risk to reward calculation. Because the closer it is to the line, my stop will always be here. Okay, my stop will always be above this highs here. Okay, so the closer the line, the better for me. I like this line just simply because of all these touches here. Okay, some of you might draw it lower. Okay, so it depends on how you take it, but I'm just saying that, okay, I'm just, the one I'm trying to emphasize here is more towards the how you use a level to analyze what the market flow is doing. Okay, in reference to a high term time frame. Any questions? Cynthia, sorry, I missed your question. How do you gauge the possibility of a breakout? Oh, okay. So I didn't see your question, but I just spent 5 minutes of rattling. Does that answer the question? Yep. So I mean, in terms of gauging possibility, one way is to go to low time frame, analyze the key level, and analyze what the price is doing in relative to the key level. Okay, it gives you a lot of hints of what's going to happen. Okay, cool. Right, so I mean, a few things that I'm just emphasizing today is very important, especially when you're trading price action, to know what the price is doing. Okay, so where am I? Oh, geez, 7:40 already. Talking too much. So okay, any other indices that you want me to cover? Not gonna move on to FX. Okay, I would say, I mean, to sum it up, most of the indices are just bullish right now. Okay, so just try to go with the flow. If not, look for short-term consolidation patterns, because sometimes when the market is exhausted in a particular direction, right? Unless there's something happen, then it might reverse completely. But if there's nothing big on the news horizon, then most probably you're looking for consolidation plays. Okay, so you just be a bit more sharp on your support and resistance and just trade the consolidation. Okay, now let me take 10-second breaks and then I move on to the FX markets.